Hello everyone, welcome back to SmallCapGuy. I think if you are watching my channel, you should have heard of options or you yourself are using this instrument now. If you haven't heard of options, that might be a good thing for you, because if you go around and ask 10 people who have traded options, I can be sure at least 7 of them are having net loss from using the instrument. Options is often known as a tool that can boost returns of the investment portfolio because you can use small amount of the capital to make huge exponential profits. Now I want to tell you that it is true, because me and my students have been getting consistent results from that. But to the public, I am really doubtful about it. In this video, I'm going to show you 3 key points you need to know before you even start to use option strategies in your portfolio. You could have learned quite a few option strategies from different resources or courses. However, I believe for most people, the first ever option trade that they have ever done would be a simple buy call option. Buy call is one of the simplest strategies to understand, as the risk and return profile is similar to that of just buying stocks. When the stock price goes up, the buy call makes profit. When the stock price goes down, buy call makes a loss. When you buy shares, the only factor that determines your return is the stock price. As for options, while stock price movement is important, there are other factors such as time and volatility. You can be correct about price movement direction, but if your timing is wrong, don't ever dream of making a profit. That's why I personally think that buying short-term options could make a person become a millionaire if he starts from $10 million. Also, liquidity plays another important role. For stocks, liquidity is not an issue, and you will see the stock price changes every fraction of a second. However, the liquidity of options is terrible. Think about this. Not every person who trades the stocks would touch options of the particular company. Even if they do trade options, there are so many expiry dates and strike prices to choose from. This is an example of the company Simulation Plus. If you are buying the call option at $45 strike price expiring on 17 June 2022, you would pay a $1,040 premium. However, the market is only willing to pay a $630 premium if you want to sell your options now. That is an instant 40% loss without doing anything. To find high liquidity options, you can take a look at the open interest. It means how many options contracts are open in the market at the moment. You can also select the strike price that is a round number. Round numbers are psychological numbers that most people would choose to trade from. Think about this. You are more likely to queue and buy a share at exactly $100 instead of $102.37. For example, this is SoFi options expiring on 15 July 2022. There are more open interest at $15 and $20 strike price as compared to 12.5 or 17.5 strike. So do not treat options like stocks, and not all knowledge you learned from stocks trading can be applied to options trading. It is a norm that for some people without solid options knowledge, they tend to make losses for the first few trades. Now, that is actually beneficial to them because they would stop and reflect on their actions, hopefully. For those who keep winning in the first few trades, they do not know why they make money, but they would happily just increase allocation of options trades. That's when the disaster would come. By now, you should understand that options possess built-in leverage that can amplify the profits, most importantly, as well as the losses. We can just use the entire market as an example. Typically, the market would have a 5 to 10% correction occasionally. During that time, a buy call options portfolio could potentially drop 20 to 30%. Some conservative people would already have a heart attack seeing the portfolio down 30%. If a market recession comes and it drops by 20%, congratulations. An options portfolio could possibly only worth less than half of the original value. That is how volatile an options portfolio is. If you want to go high allocation on options, you want to ask yourself whether you can stomach the volatility. Another thing is that for a stock that drops by 20 or even 50%, we can hold the stocks forever until the stock price recovers. That is never the case for options because of the fixed expiry dates. Therefore, keep in mind that while it is good to use options to boost investment return, the majority of the portfolio should still consist of shares. I personally think that in order for a beginner not to quit option trading due to huge losses, beginners should always start with selling options first. Yes, buying options make huge bucks, but they also often expire worthless. There is a myth saying that 80% of all options contracts expire worthless by the end of expiry dates. While I'm not sure how accurate the statistics are, think about this. When the options contract expires worthless, options buyer loses 100% of the premium and options seller keeps 100% of the premium. And in fact, the particular option strategy I would recommend a beginner to start first is to sell a covered call. It simply means owning 100 shares of a company and promising to sell the 100 shares at a predetermined price. For this strategy, it still involves primary shares, and it is a good way to link stock investing or trading knowledge to that of options while receiving a great return in terms of cash flow. It is a good starting point for a pure beginner to get in touch about options, and the risk is greatly reduced. It is not like what I mentioned just now during the second point. I would explain more about the details of this strategy in my future videos. Remember, you don't trade options to make huge gain and losses then quit the journey. You use option strategies as an extra tool to make consistent income over the long term. If you think this video has been helpful to you, remember to like and share the video. Subscribe the channel, and looking forward to seeing you next time.